Good morning, YouTube. Good morning, everyone. It is September 13th here. You might be thinking, wow, this guy looks ratty and defeated. Well, I am. I was sick yesterday. I got COVID now. So I feel like absolute shit. So I didn't think it was still possible. 2023, September, but here we are. So I'm going to be doing this update. We traded CPI this morning with our team. We had some really good breakdowns of the market price, right? We had a few shorts and a few longs, as I think flipped on the bull side on the ES, and I'll give you a plan to set up as we get started on the day. But the CPI, the inflation data that came out, obviously it's not the Fed's number one metric, but it is very important as it came out a little heavier than expected. So markets, why aren't they down, right? We had everyone looking at the consumer price index report today. Traders hope for a lot. They hoped for a lot more cues on whether the Federal Reserve has done their tightening cycle. The headline inflation rate, excuse me, has steadily been tracking down towards the 2.5% in the past couple of months, bolstering expectations of a softer landing. However, the core figure remains elevated, because of which the Fed officials are hesitant to declare victory in their fight to tame inflation. So the expectations were a rise 3.6% year over year in August, accelerating from the 3.2% in July. However, the core number, excluding volatility, food, and energy prices, expected at 4.4% year over year, easing from 4.7% in July. So the headline figure came out at 3.7% actually in August, so a slight little pop up from there, from the expectation, which caused an initial downturn in the market. So the Cleveland Fed inflation nowcast estimates an even bigger increase in inflation to 3.8%, which did not happen, with the core estimates ramping up to 4.5%. So on a month-over-month basis, the expectation was 0.6%, and it was a rise from July's 0.2%. We came in line with expectations at 0.6%. So what happened was markets dumped a slight little bit based on some of that inflation data. We could not break the S&P futures 4496, massive key region on the market. And instead, we got a decent little pop from that. And we're actually flipping the structure right now. Another thing before I talk about the trade plan for the day and what I could see setting up, because we haven't necessarily seen too much bearishness in the current market today. iPhone, right? Apple, iPhone 15. Apple failed to excite investors for its new iPhone 15 lineup, the next generation of Apple Watch operated by a finger movement, right? Where you're like, blah, 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 and it like does things. With its shares ending 1.7% lower on the session. So while some analysts expected the iPhone 15 to be more expensive, Apple kept its price unchanged, which is a good little shift. And prior to the launch, some analysts said that price hikes would be very viable revenue increase strategies on iPhone sales that are saturated. So iPhone 15 includes Dynamic Island, an interface previously exclusive to the iPhone 14 Pro and Pro Max. And the Pro version will feature a new A17 chip, which should upgrade the gaming experience. So the Pro's price was unchanged, and the Pro Max raised to $11.99 from $10.99. So all products now have a USB-C charging port. That's in compliance with European law. So Apple didn't really do much to surprise. Market got drained from that. Apple, biggest constituent in the overall market and pulling lower, right, pushes the S&P down, pushes NASDAQ down. So these indices have been turned a little on their heads from those most recent highs that we've experienced. One of the other things is that we've seen that the the investor fear and greed expectations. We're in a zone of greed, actually, right? With this market not necessarily rallying higher, so we got to keep an eye on that to see if there's any rug pulling over the next few days. If we don't see the market get absolutely crushed on today's session based on some of these increases in inflation, we're probably going to truck a little higher into the end of September before we see that sell-off coming in October. Maybe Tom Lee is right again. September, he said, was front-loaded with poor performance, and then towards the end of September, you're going to see that increase. So that's mainly what I'm looking at right now. Markets are down slightly. There's not too much news after this. We do have the Quad Witch on Friday, which is going to be interesting to trade. But as it stands right now, what we're looking at is the S&P. All right, the S&P, we failed to break lower, right? We held at 44.96. We're long from our CPI room around the 06s, 07s, now trading at about 10 points to the good. What I could see right now is 45.16 area on the S&P 500 is a massive order flow resistance, right? A lot of traders are getting trapped on the long side there. And if that should break, right, we have a little more bullishness, but I'm not necessarily that bullish until we see 45.23 move above and rebid through those areas, because we can see a very strong day that close out very strong should those criteria be met. Right, anything back below like the 16, it's very hard to count this as a bullish move, right? They could look to buy some of the dips, but I'm not necessarily that eager to do so. You start really failing under the 4,500, 4,504, especially under 44.96. So keep those in mind, keep those levels in mind. We're going to be opening our live trading room today. I hope to see you all there. I'm actually just going to go to bed again because I feel like shit. We traded this morning with CPI. We had some very good trades, some very good results. So remember, check out tradeproacademy.com. Check out community.tradeproacademy.com for our free Discord room. But all the action happens on the other side. So I'll see you all there. Thank you. Enjoy. We'll do this again tomorrow.